Happy November, everybody. I'm Stacey Perkins, Vice President of Global Marketing for Legacy Education Alliance, and I'm bringing to you our very first edition of Legacy Connection, your connection to Legacy's most shared and engaging content for the month of November, spanning from real estate and foreclosure investments to financial markets and currencies across the globe. It's so great to be able to share these insights with you. In this month's edition, we're discussing the real estate investment with a quick detour to the financial market. We'll also check in with Legacy Education Alliance's CEO, Anthony Humpage, who shares his insight on a particular precious metal and its potential effect on your portfolio. Let's get to it, shall we? Earlier this month, we circulated an infographic titled Developing Your Residential Rental Business. Amongst other things, it discussed the 3 actions an aspiring investor should take to help ensure a positive cash flow return on the very first month of a signed lease. Research, budgeting, and planning. Do you already own the property that you intend to rent out? If so, you should probably have a fairly good idea what the costs are. But let's assume that you're starting from the ground up like many of our students. How do you go about researching, budgeting, and planning? One of the many things we try to instill here at Legacy is the power of networking and mentorship. So to best answer this question, I'd like to reference an article we posted on My Elite portal last week titled, Who Do I Need on My Real Estate Power Team? Well, the first person you'll want to bring on board your team is, you guessed it, a real estate agent. This is an industry professional who is deep in the trenches of your real estate market and stays well connected to both the buyers and the sellers. They are also the ones responsible for setting up the deals that make your real estate business profitable. Research, checked. Now, when it comes to budgeting, an accountant is an expert that will help ensure that all of your finances, both your income and your expenses, are in order. This is vital for both your annual tax filing and for tracking your company's financial growth. Rather than spending late nights crunching numbers, an accountant can take care of all of this for you. Budgeting, check. Lastly, and certainly not least, is a person that you must count on to help the most productive and efficient way of going about setting up your real estate investment operation. That person is you. Nobody other than you can determine the amount of planning that will go into real estate investment. It is a process that depends on the amount of time and resources that you're willing to devote to the endeavor. That is why bringing in the right people is key, as they will help you get the most done with the least amount of time, money, and stress. Speaking of stress, the laws of this country can be pretty tedious and sometimes difficult to understand, so be sure to add a 4th member to your real estate power team, a real estate lawyer. Every city and state has a different set of laws and regulations that must be respected within the real estate market. Planning, check. Realtor.com wrote a great piece this month that we shared on our Rich Dad Education Facebook page about finding the magic number for just how much home one can afford. If you're thinking about starting a residential rental business from the ground up, then this is a major component of the planning stage and one where a mortgage broker can be very helpful. Are you familiar with the debt-to-income ratio? It is one of the most basic equations you can use to figure out home affordability. It is essentially a way for you and lenders to compare how much money you make with how much you owe and how a house can fit into that particular picture. We highly suggest you check that blog post out. You can find it by clicking the appropriate link below, listed alongside all the other resources referenced here today. I'd like to switch gears for a moment and step into the financial markets sector. Markets are not impervious to human emotion, and from a macro level, they can react to breaking news as swiftly and violently as a golf ball that has been struck by a driver on par 5. On the eve of the 2016 U.S. presidential election, we thought we would invite financial expert Mark Justice to explain the powerful effect a certain event had on the market just days before the American people cast their vote. Here's the clip from last week's edition of Investing Talk Live. Let's listen in.
If you want to understand market psychology, so the FBI releases its statement that it's reopening the Clinton investigation. The markets correspondingly instantly fall off a cliff. Why did that occur? The key principle to understand here is markets love certainty. They like to know, good or bad, what the facts are, and thus they can make their decisions, their investments, they can formulate plans accordingly.
Thank you, Mark. Indeed, it is us, the individual stakeholders, investors, and participants in the economy who shape and even dictate where the market goes next. Any pebble that we toss into the market's pool of certainty can cause a ripple with long-lasting effects. That is precisely why proper financial education is so imperative, so that you may not only anticipate and prepare, but capitalize and even flourish in the face of such volatility. Our final segment of this month's edition of Legacy Connection is brought to you by Legacy's very own CEO, Anthony Humpage, as he discusses a new reason why you may want to add a certain precious metal to your portfolio. Let's listen in.
Hello, it's Anthony Humpage. We're going to start you off with one of our Asset Cubed minutes. Today let's talk about precious metals, but really gold. I've talked about gold the last month, both here in the US and around the world in Europe and Southeast Asia. Gold's been one of our best performing asset classes in America this year. Last time I looked, a couple of weeks ago, we were up over 30%. But as we go around the world, gold protects us against currency devaluation. And when I was in England a few weeks ago, we were looking and saw that gold is up there in pounds over 40%. Why the difference between here and the US? Because, as some of you may know, the British pound has suffered a devaluation this year following the Brexit vote. So Britons who bought gold at the start of the year have been protected against the loss of the purchasing power of their pound. That works in any currency that you bought gold in. So it's a real safeguard of your buying power. Let's think about a little more about how gold protects value. Because after all, it doesn't pay us interest and it doesn't pay us a dividend, but it does protect value. And if you've heard me speak, you'll know that one of the examples I like to use is back in the 1800s, late 1800s. You could buy a pretty decent man's suit with an ounce of gold. Today, here in the US, you can buy a pretty decent man's suit with an ounce of gold. And that to me is a really good example of how gold just protects your buying power. It's one of the reasons I think it should be included in everybody's asset allocation. It's up to you to decide how much, but you should have some. Hey, thanks for listening, and we'll talk to you soon with another Assets Cubed Minute.
Thank you, Anthony. As Legacy's CEO points out, gold can be our safeguard against currency devaluation as a result of uncertainty. And as we have stated, this is something that can occur in the blink of an eye. Each and every one of us has the power to constantly search for ways to improve and grow, to become more competitive in the marketplace, to invest in the future and diversify. With this power comes the need to stay protected in the face of adversity and uncertainty. As we wrap things up, I'll leave with you a quote we shared a couple of days ago by Arthur Ashe that speaks to this notion very closely. Start where you are, use what you have, and do what you can. These words can apply to almost anything in our lives, and it's a wonderful reminder to always put things in perspective and try each and every day to invest in yourself and to never stop improving. I'm Stacy Perkins with Legacy Education Alliance. Thanks for watching, and we'll see you next time on Legacy Connection.